W.P Carey. This is a US-based real estate investment trust. So its ticker symbol is WPC, pays a dividend 4 times a year, and the last dividend I received was for 89 cents per share. So it says here on their site, they're one of the largest diversified net lease real estate investment trusts, specializing in the acquisition of operationally critical single-tenant properties in North America and Europe. So they have 45 plus years of helping companies monetize their real estate, and that's through property investments and long-term tenant partnerships. So some of the options they have here, this website's actually very nice. It's one of the first ones I've come across that seems very orientated towards helping whoever's visiting the website rather than just talking about themselves. So some of the services are sale leasebacks, which help you convert your company's owned real estate into capital while maintaining full operational control. There's also build to suit, which is to develop a new facility custom built to your unique specifications with no upfront capital expense or equity required. They've also tenant partnerships, and these gain a long-term partner with the capital and development expertise to fund and support your evolving real estate needs. Yeah, it's quite a lot on the website. It's very nice to look through, but I won't spoil too much of it. You should be doing your own research. So I'll leave this here for you to dig through. Have a look at their portfolio, asset management, tenant inquiries. But having looked through them, they have a good debt ratio and a good profit margin over the last while. So at the moment, today they are $84 per share. And I think the dividend has gone up a bit. I'm due another one. I think they pay 4 times a year, so I'm probably due another one soon. But the last one I received was for 89 cents per share. They currently have 183 employees, headquartered in New York in the USA. They're in the services sector and the real estate operations industry. So W.P Carey is an internally managed diversified real estate investment trust, or REIT. The company is an owner of commercial real estate net leased to companies on a long-term basis. Its real estate includes single-tenant industrial, warehouse, office, retail, and self-storage facilities. And the company manages its real estate portfolio to monitor tenant credit quality and lease renewal risks. It operates through 2 segments, which are namely real estate and investment management. It invests in commercial properties located in the USA and North and West Europe. Its portfolio consists of about 1,200 properties, net leased to approximately 350 tenants. And in addition, the company's portfolio includes full or partial ownership interests in about 20 operating properties, and this includes 19 self-storage properties and 1 hotel. And it manages its real estate investment portfolios for the managed programs through its taxable REIT subsidiaries, or TRSs. So looking back at their dividend history, looking very promising. This is what you like to see. So they have a nice healthy yield of 5%. I would put the sweet spot, and everyone else seems to put the sweet spot at between 3 and 5 or 3 and 6%. And anything above that is a little bit dangerous. Anything below that is not really worth it in the long run, unless the company itself, you have a lot of conviction in it. But going back to, this goes back to 1998, where it was 41 cents per share. And it seems to have stuck like that for the year. And then it went up the next year, then up again the next year. In 2001 it went up again, and it just seems to be consistently growing, which is what you like to see. A nice healthy yield and very nice consistency in raising the dividends. Very nice. So the last few details from here are their profit margin, which for the last year is about 31%, and over the last quarter is 37%. It's very good. Their annual debt to assets is 51%, which is very good. It might sound, if you're quite new to investing or new to dividend investing or the stock market, when you start looking at companies' debt, for the first time, like you'd be quite shocked at how high a lot of companies' debt is. So 50% is actually very good. And quarterly is 50%. And its annual cash flow from operating is $926.5 million. From investing is negative $1.5 billion. And from financing is $557 million. Over the long term, this is also a very nice graph. This is all the way back to 1998, and the company was founded in 1973. So it's done very well over the long term. That's lockdown. And it's pretty much recovered to where it was. Very nice. It hasn't really suffered as much as the rest of the stock market recently. Currently has a 52-week high of $89 and a 52-week low of $73. As far as dividend investing goes, W.P Carey appears to tick all the boxes. It's got a good 5% yield. Their debt is good. Profit margin is good. Business model is good. Now, I would have quite a lot of faith in this company as long as they continue operating as they are now and don't make any rash decisions. But anyway, if you like individual stock breakdowns, dividend investing, or if you're just new to the stock market, feel free to like and subscribe and all that good stuff. And most importantly, let me know what you think of W.P Carey. Appears to be quite popular.